Man, what's good, YouTube, man? It's your boy ZC Trades. Today I want to go over something that I use. I'm not going to give out all of my sauce, but I'm going to show you guys a basic 5-step protocol that can make you profitable in these markets with the proper management of risk. Okay, so like I said, there's 5 steps. 3 of these steps are just checking time frames. 1 of these steps is just finding this key pattern in the market. And 1 of these steps, the last step, is just getting that sniper entry. And I'm going to show you guys how I do that. Odds are, if I'm not using this model, I'm not trading for the day. If I don't see anything using this model, I'm not trading for the day. If price action is sloppy, I'm not trading for the day. So look, I got my charts up right here. I got US 30 pulled up. Now I do want to mention, this is only for day traders. This is only for people that are scalping from, either London session or New York session. So I'm in the market most of the time between 9:45 and like 11:30. 11:30 at the latest. These squares that you see on my chart, they're marking up the kill zones, the sessions. New York session, London session, and New York PM session. I don't really care for Asian session because most of the volume is delivered within London and New York AM. So look, your first step is you want to check the 1-hour chart. Now I'm going to be back testing. I want to back test. Maybe we'll back test just the week of January 8th. I believe that was last week. Yes, that was last week. And how I'll be doing that, I'll be starting right at 9:45. I'm going to go into analyzing the market. So right here, the first things that you want to mark up is you want to mark up the liquidity from the kill zones. Okay, I understand a lot of people like to mark up equal highs and equal lows. Look, I promise you, you mark up the liquidity from the last session or a few sessions before that. If you mark up liquidity from New York kill zone and London kill zone, you will begin to see something that it was just invisible to you before. Okay, so look, I'm going to mark up this London high and I'm going to mark up this London low. Now I want to look to my left and I want to see, is there anything lower than this right here? New York kill zone low right here, as well as a volume imbalance. All right, now you want to be careful with volume imbalances because sometimes they'll pop up on my trading view and they won't pop up on my actual broker or like my MT5 or whatever. So you want to be real careful with volume imbalances. But if the volume imbalance is true, if it is authentic, man, every time I see an authentic volume imbalance, I'm making money that day. Okay, now look, this is the model. This is the first step. We just marked up our 1-hour liquidity. Now look, I want to see if this is a real volume imbalance. I don't know yet until we drop into a lower time frame. And I also see that this is a gap here. But being that this London session drew about 50% into this gap, about 50% equilibrium of this gap, I'm going to drop into the 15-minute next. So step 2, drop into the 15-minute chart. Now once we get here, we want to just redefine any type of target that price can go to. Price can move to gaps, inefficiencies, or liquidity. Every time if it's not moving towards liquidity, it's moving towards some type of inefficiency in the market. Okay, if it's not going for inefficiency, it's going for liquidity. Now look, check this out. So what I want to do is I want to mark up my inefficiencies, the things that I see. This is one that I see that I believe is reachable within a 1-hour candle, that I believe is reachable within the New York session. It might go higher, who knows? But we have this London high right here and we have a 15-minute inefficiency right here. So I'm going to mark that up. I'm going to just double check over here. This would be a low resistance liquidity run. Price would just run right through this and run into this volume imbalance right here. So we'll see what has the pull on price. And that's why we drop into the 15-minute. We just want to redefine whatever we marked up on the 1-hour chart because we're scalpers. We want to be precise with what we do. You dig what I'm saying? So now I want to drop it to the 5-minute chart. Now, typically on the 5-minute chart, when I'm scalping on the 1 minute. So typically on the 5-minute or the 15-minute, I want to figure out what direction am I going to trade in? What direction is price going to go into next? We're not like swing traders or nothing. So we don't have to be correct on the daily bias. You know what I mean? I'm not trying to be correct on the daily bias. I typically don't care for it. I'm in for 1 minute, 1 to 3. That's all I'm trying to do in the market every single day. Now, sometimes I am right on my daily bias. Now, if you get to the point where you develop your skill set to where you can drop into the 1 minute and scalp a trade and catch the whole, daily move, that right there, that's going to take some time, but you will be beast mode if you did that. So look, on the 5-minute chart, I see that we just tapped into this inefficiency right here. And I also see that we have relative equal highs right here, right below this London high. So look, what I want to do is I want to drop into a 3-minute. I want to see what we're looking like. Okay, I want to drop into a 2 minute. I want to see what we're looking like. And I want to drop into a 1 minute. Now, check this out. What I want to see is a market structure shift in the direction of one of our inefficiencies, or in the direction of one of the zones of liquidity that we marked up. Now, this is a smart money concept. I learned how to trade from ICT. I've went through a bunch of different mentors. ICT, just the narrative, it works for me. I understand that. But what I want to show you is the market structure shift, because this right here, it'll change the game for you. So check this out, right? A market structure shift. Now, imagine that this right here is a fair value gap. If you don't know what a fair value gap is, okay, cool. So now this is a fair value gap. This is what I have marked up as a SIBI, sell side imbalance, buy side inefficiency. This is what I like to call them because it's actually just a more technical term for it. So this right here is what we call a BISI, a buy side imbalance, sell side inefficiency. Okay, so now this leg right here, now let's say we're looking for a market structure shift up. This leg right here, we want this sell side imbalance, buy side inefficiency to be rebalanced, okay? To be rebalanced in this motion right here. Then we want price to return into the direction that it was going in the first place. Once it does that, we will have what is called a short-term high. Now we want to see this short-term high that will be right here. We want to see this short-term high broken above, full body candles, and we want to see displacement. Now what'll happen once that happens is we'll see our BISI on this leg of the candle. Now what we want to do is we want to take our entry on that BISI and we want to ride it up into an inefficiency above or pool of liquidity that is above it. Now this works best when price has just taken liquidity and it's being tapped into a fair value gap on a 15-minute chart, 1 hour chart, or 5-minute chart, anything that is higher time frame. When price taps into that and then we get this market structure shift, man, the plays usually end up beautiful. They play out beautifully. And it's the same thing as this, and I'm just going to go into a live trade and show you guys this. Not even a live trade, this is old data. So now look, we see this SIBI was tapped in and we see that price is still respecting this right here. So what I'm going to do is I'm going to put this light bulb right here. Now if we break above this, I'm expecting us to go tackle these relative equal highs right here at the very least, and then take this London high out and then tap into this inefficiency that we marked up. I believe it was on a 5-minute chart. So look, okay, so we did break above it. Now since I don't see a clear BISI right here, I want to jump into a 2-minute chart. I want to jump, okay, we do have one right here. I want to jump into a 3-minute chart and I just want to see, okay, yep, check this out, right? We got this right here. And I love imbalances that are stacked on top of each other because they act as like a trampoline for price, I swear to you. I'm going to drop into a 1-minute chart again. I just want to see price return into this area or into this area right here. And if it does, which it just might, because we have two of these inefficiencies stacked on top of each other, we might get a sell-off, a quick sell-off. I'm going to be entering for a buy. I'm going to mark up the consequent encroachment of this fair value gap that we marked up on a 3-minute, and this is where I'll be taking my buy. I'll take this buy for 1 to 2. Now, we didn't get the exact entry that we wanted, but you see, as you can now see, we ran after our market structure shift. This was our market structure shift. Now, if you can't see this right here, if you can't see how this plays, look, I'm gonna show you something. We had this down move, we have the rebalance of the inefficiency, and we also have a return into the original direction. Then we have a displacement up. Then we have a return into a BISI, and then we have the move. Now, sometimes these moves happen on a lower time frame. I have TradingView Premium, I believe, so I could drop into a 30-second chart and I can actually see what's going on a more micro level. So we can see we had the same thing right here, right? So look, check this out. The same scenario happened literally right here. Down, a tap into a inefficiency, a return down, displace above, entry is right in here. Entry is right in here, and this is our target. And we can see how this area was respected. Now, that was a long explanation. So in these next 2 or 3 examples, I'm just gonna run right through them because I just want to show you guys. This is a strategy that you can easily be profitable with, okay? Look, simply start on the 1 hour chart. Do you see anything that catches your eye on the 1 hour chart? Not too much. I see that we have this London low right here. I see that we have this fair value gap here. I'm sure that we'll have another fair value gap in here once I drop into a 15-minute chart. Okay. Really nothing. I don't really see anything. All I see is price descending lower. I do, however, see price tapped into the equilibrium of this range right here. Yeah, we dove into the optimal trade entry of this price leg right here, and then we descended lower. So you know what I'm gonna say? I'm thinking that we're gonna go lower. I'm thinking that we're gonna go at least to these New York lows right here. This is how I set my target. I'm gonna drop into the 5-minute chart, and now I'm starting to see a little bit more. I see that we have this BISI right here that has yet to be filled in. I see a torrential downpour on price. However, I don't see anywhere to get in it. Let me jump back up 15 minutes. Now I don't like this wick that's rejecting right here, but I don't see any reason for it to climb up unless it's going to climb all the way to up here into where the London session left the inefficiency. I'm going to drop to the 3-minute chart, 2-minute chart, 1-minute chart. Now check this out. If we tap into this BISI right here and we catch a market structure shift, we're going to fly for a little bit. Okay, bro, we're going to fly for a little bit. But as of right now, since we're so close to this BISI, I want to catch a sell into it. I just need to see a market structure shift downwards. Okay. With displacement, that is very important as well. I need to see displacement. I need to see a candle move fast, a candle move like it knows exactly where it's going. Okay, no confusion in this candle. I don't want to see this candle hesitate at all. I want to see a full candle left with a fair value gap that it needs to rebalance so we can jump in our trade. Okay. This is ugly. I ain't gonna lie, this is ugly, and we're very early in the session. This could be a possible sell. This tapping into this could be a possible sell into this BISI, but because of the risk to reward, it's less than a 1 to 2. I wouldn't even take it. Okay, so look, check this out. This right here is exactly what I mean by displacement. I want to see a candle that knows exactly where it's going. All right. The fact that we just displaced above this tells me we're gonna go up for some reason. All right. Now, where can we go up? That's what I'm looking at. Before I take a buy, I want to have a good idea of where price is going. Only place that I can see price possibly heading for is this inefficiency here, because we have all of this engineered price action that happened at 9:30. All of this right here. Okay, so it's currently the next day, and I realized while editing this video that I didn't give an explanation on why I use this liquidity as my target. The reason I use this liquidity as my target was not because of the price action itself, but the time that the price action was formed. Around 9:30, New York Stock Exchange open, there tends to be a lot of manipulation that happens at that time every single day. Not only that, we have that whipsaw motion, and this manipulation is neutralized typically within the New York session every single day. So pay attention to that, go back test that. This is the same reason why we use kill zones, highs and lows as our liquidity targets, because what's more important than price action itself is the time it's formed. So let's get back into the video, man. Peace. So if we were to take a buy, I would just simply target this or this. Now if we return into this area, this right here is exactly what I showed you. We have the SIBI right here. We have the tap into the SIBI. It did play around, but we did have the return in the initial direction. And then we have the break above, the displacement above. We're going up, my friend. We're gonna snipe us an entry and we're gonna ride this baby up. So this is a possible entry right here. One thing that if you wanna add some extra sauce onto this, you wanna add some extra flavor onto your strategy, bro, bust out this SIB. Bust out this fib and go body to body, and on this price leg that has displacement on it. Okay, go body to body. Now we only want to take an entry that is below the 0.5 area. We only want to take an entry that is below equilibrium. This would be a discounted buy. Now if it was a sell, we only want to take something that's above the 0.5. This would be a premium sell. I believe I have those correct. This looks like a nasty little buy right here to catch it riding up, but since I have a rule that I only take premium or discounted buys or sells, I'm not going to jump in on this right here. Look how it reacts to the premium of this price leg. It respects it. Now if we dive into this area, then I'm going to snipe something, and there will be live examples of this as well. Okay, you know what? I don't think we're gonna drop directly into it. I think that would come into this 2-minute fair value gap right here. This 2-minute displacement right here. And look how it respected it. Dropped right onto it. Now I wanna show you guys something. This is a 1 to 2.5. You guys go get you a $100,000 account. And let's do the math on this. Now look, you guys go get you a $100,000 account, risk 1% on this trade right here. This trade that was easy. All that we had to do is be patient, okay? All that we had to do for this trade like right here. Now, I don't know if this trade is going to play out. However, this is the setup. All we have to do is go to the 1 hour chart. We want to drop into a 15-minute chart. We want to drop into a 5-minute chart, and we want to mark up our inefficiencies and our target areas that liquidity is resting at, okay? Now, what we want to do is we want to try to find this market structure shift pattern, which is a inefficiency being rebalanced that creates a short-term high, and that short-term high being violated by displacement. That displacement will leave either a SIBI or a BISI depending on your situation. And on that price leg, you only want to take an entry that is in the premium or discount depending on your situation. Once it comes into that premium or discount, you take the buy or the sell in a fair value gap or a SIBI or a BISI, and it's out of your control, okay? This is a very profitable strategy. This is what I learned from thousands of hours back testing and studying my own data. This is my most profitable strategy. So if we had a $1,000 account, I just want to show you how quick it was to find that setup. We're just going to take this buy right here. We're over leveraging slightly, but we don't really care. This is back testing. Now, what I want to see is I want to see displacement above these highs right here, especially these highs. I want to see that thing move above that. Once we get above this high, I'm moving my stop to break even. This will be a risk-free trade. Yep. And boom, it's simple just like that. Now, some people, I don't know, like, you know, retail, they'll have like a heads and the shoulders or inverted heads or shoulders. Look, I don't know what you want to call it, but that heads and shoulders shit, that shit don't really work like that, guy. I've tried it, my guy. It don't really work like that. It also feels a lot better when you can actually see this for what it is with the terminology and the logic behind it, okay? All you want to do is you want to go into a 1 hour chart, 15-minute chart, mark up your inefficiencies and your target liquidities from the previous kill zones. I just explained this. All right, I'm gonna do one more example. Not really gonna do too much talking though. I'm just gonna run right through this. What do I see? I see New York highs. I see on a higher time frame, we have our market structure shift as well. We have our rebalancing of a fair value gap. We have the return in the original direction, and then we have an impulse move causing displacement upwards. Then we have price returning into a premium of the area before moving upwards. Now pay attention to how perfectly this respects the optimal trade entry to 79%. Even if we move it to right here, it's still being respected. So what I think we are in bullish momentum. Drop into a 15-minute chart, I see that we have these lows here. I don't think we're going to touch those in this session. The trade that I want a buy. I got higher time frame confirmation on the 1 hour chart that we're in a market structure shift up. I want to go up and take out these New York highs, okay? What am I looking at? I see that we tapped into this inefficiency. I see we have this super duper tiny BISI right here. I'm gonna mark this up. The small inefficiencies matter too, all right? I wanna mark up this gap right here because we might not come as low as this gap right here, but we are at around optimal trade entry into this gap. At some point, we're going to catapult up. What I'm trying to do is I'm trying to catapult up with the chart. So I wanna see what price has the best reaction off of, okay? I'm gonna drop into a 3-minute chart. Still don't see a good fair value gap. 2-minute chart. Okay. Now I'm seeing something that I like because now I'm seeing a BISI. I'm seeing a buy side imbalance, sell side inefficiency. Also, what I'm seeing is I'm seeing a SIBI here. I'm seeing a sell side imbalance, buy side inefficiency. So you know what this is giving me? This is making me excited. This is making me excited because I want to see price tap into this, come a little bit lower, and then displace above it so that we run into these New York highs right here. We might not get that, but there is the possibility of it right now, okay? And I'm going to drop into a 1-minute chart, and let's just see what we get. We also have a market structure shift down right here, but I'm not taking a sell off because my overall bias is bullish on the 1 hour chart. Would have been a nice sell should we have returned into this area. Look how it respected that tiny inefficiency on the 5-minute. All right, let's see what it does. We got this tap in on the BISI right here. I wouldn't exactly call this rebalance, but it rebalanced a portion of this fair value gap. If I see displacement above, I'm taking the buy. That right there, this little run right here is what I would call displacement, all right? It's barely displacement, but it is displacement. This is barely a short-term high, but it is a short-term high. Now, if my bias wasn't bullish on the 1 hour chart, I most likely would not be taking this buy. I don't know if this buy is gonna play out, but I most likely would not be taking this buy if my overall bias wasn't bullish, all right? What I would do is, I'm gonna set my stop right here. I could use this SIBI as a easy target. There's nothing wrong with using gaps as targets. You don't always have to chase liquidity, all right? That is is one thing that I favor this strategy for, because it's easy to, if your setup doesn't work out or your Sibby or Bissy isn't tapped into and you get a market structure shift in the direction of that Sibby or Bissy that wasn't touched, you can use that as a take profit. So let's just keep it simple and we'll just use this as a take profit. All right, now let's see. All right, bet. So I was waiting for a high to be made and price to move a little bit lower for me to take my fib across this. And honestly, I would use this price leg or this price leg here. All right, so my entry is in a discounted spot for a buy. All right, now look, if we get our entry, we're gonna tap into this 1 to 2 and we're gonna let it ride. Now look, I also wanna highlight this for you guys as well. Now check this out, look, I typically don't like to, if my TP is already hit before I get an entry, I do not like to enter into that trade anymore. But since we're going up on the hourly chart, bro, this could be a crazy big play for a 1 to 6. So I am gonna jump into this if we get an entry again. Boom. If we get another entry, yep, we got our second entry. I'm gonna set this TP for a 6% trade, and I just wanna see if it plays out, right? We have our market structure shift. We're tapping into the market structure shift. And once we break above this high with displacement, I will set my stop to break even. Goodness gracious. Come on. Okay, boom, boom. Now, I didn't set my stop to break even. If I did set my stop to break even, we wouldn't have lost this trade. We just wouldn't have gained anything. We did come close to being stopped out a few times. Now, look, the ideal stop loss, the safest stop loss would have been below this low. But I set it right here simply for the fact that if price came below this small wick right here, then the odds are it's going to come and tap out this low. So I just took the riskier setup. It turned out to a 1 to 6, and just like that, we're up 9% within 2 trades from a very simple procedure. Now look, this, I didn't plan on this video being super long, but my good brother, if you implement this into your charts, you go into your charts and back test this, spend hours testing this out, test it out on Forex, test it out on indices. If you are a swing trader, I'm sure this the same thing will work. Implement it into your strategy. We just ran 2-0, 3-0, I'm pretty sure. Obviously, you're going to lose trades, but this has a high winning rate. You don't want to take the trade unless it has displacement. You don't want to take the trade without a higher time frame fair value gap or a higher time frame pull on liquidity. It's very simple, very simple. But that market structure shift and the displacement was just a game changer for me when I added it into higher time frame narrative. That's all I wanted to share. This is an easy strategy that you can be profitable with. This is the strategy that I will be receiving 6 figures in funding with this year, and I'm going to document it all for you guys. But yeah, man, that's about all I got, man. I hope you guys found value in this video, and I'm gonna get with y'all next time, man. Peace.